Let's go. Let's do a brief audio and visual check. How's everybody doing tonight? Make sure audio, video is good. Get a few things set up on my end. And while I'm doing that, welcome everybody. Welcome to Slow Markets. I'm Coach Dakota, Coach DBA, and as always in the YouTube chat, there's our top step risk disclosure. Everything we go over is for educational purposes only. It is not financial advice. It's not signals class. We know the drill. We're here to learn and become better traders. So all good for the weekend. Ready for a busy week, a full week. As traders, sometimes it's hard to enjoy the weekend, right? What do they call it? Adidas. All day I dream about sports. You could say the same thing about trading, right? During the week, you trade. Trading can stress you out. You go through those emotional roller coasters of trading. And then over the weekend, all you can think about is getting back to the charts and getting back to these markets, waiting for them to open. So definitely need to take some time away from the charts. If you don't on the weekends, it's harder to do it during the weeks. During the weekdays when the markets are open. Hey, Dakota, new hairstyle? Nope. No, just no new hairstyle. Maybe it just looks a little different. Nice new ride, Coach. Thank you. Shout out to Crawford, futures trader. I was going for Canelo, but Crawford showed that he is officially the best pound for pound boxer. And yeah, he's just showed how amazing of a boxer he is. What is the new contract after rollover? Rollovers this week. The platform will roll the contract over. I believe it will be December. Correct me if I'm wrong. Yeah, how about that fight? We loved it. We loved the fight. I enjoyed it. I'm a Canelo fan, right? I was cheering for Canelo. I didn't think Crawford could do it, but he just blew my expectations. It was amazing. I am now a extremely big fan of Crawford after that one. Jack Boom, what does that have to do with anything? Do you know how many people expected Canelo to win? Yeah, I loved it. As soon as Crawford was able to take those body shots, I'm like, all right, it's over. Round 4. After round 4, it's like you kind of could tell it was over. Didn't expect Crawford to look that comfortable. No, Coach J. Like I expected, like, okay, maybe a little bit of a closer fight, but Crawford just pieced him up. Crawford pieced him up. It was talking about the sweet science of boxing. Sweet science of boxing. Big show. I loved every moment of it. Crawford's been, yeah, countdown him in the selling. Nope. So let's get to these markets. NASDAQ daily charts. And yeah, is this a trading live? Is this a trading live? WTF? This is a live educational trading show. Yes, and if there's trades, I'll place it. And we are live. I think we're live. That's because you guys, Jack Boom. Little do you know, bud. Roy Jones Jr. is absolutely my favorite. How's my XFA doing? Going pretty good. Here's my XFA. Go through these stats if you want to. It's recorded. I'm on a pretty good win streak. We'll see how it goes. Just trading small, base hits, nothing too crazy. So let's get to this market. Daily chart here in the NASDAQ. We've been hitting all-time highs this week. Let's go through this. Look at this market. Going up and to the right like the markets do, it seems like, especially the NASDAQ. There's a saying, I've talked about it a lot lately, where it's just I've seen more all-time highs than I have seen all-time lows. And throughout this year, we have seen all-time highs, right? We had that craziness back in the beginning of the year. We're getting back on track, and yeah, look at this. We've been going up and to the right. It's been choppy, buy the dip kind of mode. Every time we've had a nice pullback here in the NASDAQ, it's presented some really good opportunities to buy the dip. And then after things start to settle down a little bit, you can see where we've had these nice periods of just bullish movement. And so it's starting to look very much like one of those, periods where we go and chop higher, right? This is all-time highs here in the NASDAQ when we got there, this area. I'm pointing to it. And when we got to all-time highs, we just kind of chopped up and to the right, continuing to grind higher, making all-time highs. And then sure enough, it's the same thing. Went through and hit all-time highs. And so I'm curious, we didn't get a crazy breakout where we broke all-time highs and we just ran stops and we keep going like it's a short squeeze. We are kind of hovering just above all-time highs. We're below Friday's high. So maybe we do just end up consolidating and chopping. Remember, this is a daily chart. And so, take it with a grain of salt. If we take a look at this Trader Hub this week, of course, let's take a look at the news. Tonight is Sunday. It's the 14th. Depending on where you're at around the world, it might be Monday for you. So Monday, we don't have too much going on. We have some Fed speakers. Tuesday, we don't. Once again, not a lot going on Tuesday. Retail sales, if that's going to mean too much to these markets. Some data, nothing major. When it comes to this, I think what takes the highlight is going to be Wednesday. Wednesday is going to be the highlight of the week. We have FOMC rate statement of September, interest rate decision, and then is Powell not doing his speech? Let me know, chat. Yeah, where's Powell? Where's Powell at? That's what I want to hear from. I want to hear Powell speaking. That's my favorite thing to do when it comes to trading is listen to Powell's speech and watch these markets react to every word, right? But FOMC rate statement noon, 1 p.m. Central on Wednesday. I think that's what's going to take most of the light, the limelight, the light, the eyes, everyone's interest is going to be Wednesday. So Monday and Tuesday, we might just see a lot of chop. Monday, Tuesday, we might see a lot of chop, a lot of indecision, not too much of a breakout in either direction. Now remember, anything can happen. This is obviously just my opinion, what my experience has been going into a very big news event. Prior to that, we can see some unpredictability. On top of that, it's rollover. So not only on top of a big news or big event on Wednesday, we have rollover. So that could also lead to some very sporadic movements that could be very unpredictable. We talk about tape bombs where the NASDAQ will jump up, 20 points or drop 20 points in either direction for some random thing. And there's just no explanation behind it. It's just that these markets could be very unpredictable and choppy going into a big news event. And then it's only multiplied or, magnified with a big news event on Wednesday. But we are staying above these all-time highs that we've seen. And we broke through and broke out. So that is good for the bulls. It's nothing too crazy. Let's zoom into an hourly chart. And see where we are at. Man, it's been a good couple months for me buying the dip. We could see this has been a very nice trending market. Each one of these dips have been very good buying opportunities. And I've talked about it a little bit ahead of time, and it's been good. We did break through a solid resistance, this 24,000. It's a big round number, and you can see how solid this resistance level was. Very, very solid. So the question is, can we come back down, test it, and then look for some buying? If we can get back down to these 040s, it might look tempting. It might be tempting to look for longs around there. Maybe we come back down and just test this 2,400 round number by then. Tonight we are just hovering around settlements. It looks like 150, 160, 159 is the all-time high right now. Nothing really on the hourly chart that I'm interested, like these 040s. Let's take a look. I want to see the 5-minute chart, and then we'll jump over to gold. Gold's been a lot more a lot better when it comes to this time of night for, volatility and some trades. Immediately, the first thing I'm seeing is we are actually running into some lower highs, right? So we got a little bit of bearish pressure, and we have a very solid support level. So this could be a decent area to okay, if we're going to hold this support, maybe we come back up and test these highs or look for a breakout, right? A breakout type trade. That could be an option. Another thing is maybe we do break down. Maybe this gold this NASDAQ can break through this support level, and then we could start looking for other areas of support that we could come down and start testing, like these 70s, maybe come down to these 50s, maybe 40s, another level like that. But we're getting some bearish pressure here tonight. I mean, that could change in an instant. It's hard to short this market after we're hitting all-time highs, right? When the market's hitting all-time highs, the last thing you want to do is be aggressive with shorts, right? This is real life. We're really trying to become good traders, real traders, not just unlimited resets or unlimited sim accounts where we just could try and keep shorting until it turns around, or until you just have unlimited funds, right? When it comes to resets or a sim environment, we're actually trying to become better traders, real traders, so that we could, find that success, that consistency in a live, real market environment. And I don't like, and from what I've seen in my experience, is shorting all-time highs and such a bullish market is a very not the best. Let's just say not the best, right? There is opportunity there when we see market volatility, but more times than not, we continue to see all-time highs. We'll see. There might be some short scalp opportunities here from these 100s down to these 70s, but I definitely want to be getting in with this trend, finding ways to buy this dip. Unless there's some headlines. There might be a headline that could change things, right? Let's take a look at gold now. Let's take a look at gold. We'll get to some questions. Gold's starting to sell off. We're seeing some movement here in gold. Gold's down almost 0.5%. Let's just take a quick run. Very similar, right? Little less bullish than the NASDAQ, right? Because we've already been at all-time highs here in gold. We had that nice breakout, a pullback, a rally up, and now we're just kind of consolidating here, just under 3,700. So nice consolidation, barcode consolidation, bullish flag, bearish flag, pennant. We're just consolidating, and we made the all-time high up here just above 37.14 in that level, and anything inside this is looking like we can be range bound here on the daily chart. I honestly would like to see some type of a pullback and then look for opportunity to buy it. But I don't want to be just jumping into shorts here in the gold. Very similar to like I was discussing the NASDAQ. We have so much bullish momentum. You don't want to be the first one in, right? Being the first one in, it sounds good, right? Because if you're right, I mean, it has a high risk reward, but it's like same thing. Trend is your friend. There's a reason why people say it. Trend is your friend. Trend is your friend. Looking at gold, it looks like these 36.90s is a nice level of resistance. These 36.60s is a nice level of support. And what do we look at and say when we are in a consolidating market? You like to see a buy low, sell high. Every time we come to the top of the range, look for opportunities to sell it or take profit. Bottom of this range could be definitely opportunities to buy it or take profit if you are short from above. Expecting a breakdown below this, it's harder. It's harder for me to expect a breakdown below this rather than looking for a breakout in the direction of this trend. But like I said, anything can happen. Right now, we're in just kind of consolidation mode, wait and see. Maybe we stay in this range until FOMC. That could be a possibility that gold stays in a range bound or a choppy environment until Wednesday after the rate decision. That would be interesting. Until then, let's take a look at a 5-minute time frame. There might be some scalp opportunities to the downside, right? Using that higher time frame analysis, fact that we're in the middle of this consolidation, we're right in the middle. Maybe it's like, okay, do we really want to be getting into a position long or short in the middle of this? However, if we are expecting this market to continue to the bottom end, maybe there is some short scalp opportunities as we go down there, right? But then every time we are in the middle of this, look, there has been levels of support and resistance that we can see this market bounce right in the middle of this range. So don't diddle in the middle. It's a tempting one. It is very tempting. Let's see. We could find a move down to these 50s. We definitely could. I'm not saying we wouldn't, but it's hard for me to get into a position in the middle of this range. We shall see. So let's get to some questions. Go through. We'll watch gold. Remember the top of the hour. So in about 14 minutes, we do see a spike in gold, spike in volatility as these markets get going. Let's go through some of these questions. Hey, Dakota, you just don't trade the Nikkei anymore. You used to kill that trade, and I enjoyed you trading that. Jack Boom, yeah. I don't look at the Nikkei very much anymore. I don't mind it. It's just the trades that I used to do, there's not as much opportunity for me because I have such a... Let me make sure I explain this correctly. My attention span, or my attention was spread out too much over the past spring and early summer. I was watching too many markets, and I decided to just narrow my focus down to the NASDAQ and gold and just focus on my process. And ever since then, I've seen a dramatic improvement in my trading. It doesn't mean that there's not opportunities in the Nikkei, which is the Japanese market, or you could make some great money in like trading this market or a different market. It's just me. That's it. It's me, my own personal, and I'm like, okay, I need to refocus. And whenever I do struggle or need to refocus, the best thing for me is to simplify everything. Okay, let's start like, hey, I'm struggling this month or this quarter, and I've struggled. So the first thing I need to do is take a step back, refocus, simplify, get rid of as many distractions as I possibly can. Like maybe if it's indicators, right? If I have like a bunch of indicators on my screen and I'm struggling, the first thing I would do is like, well, go through all of my indicators and realize, do I really need all these indicators on my screen? And do I really need to be trading all these markets? Let's narrow my focus, narrow what I'm paying attention to, and kind of simplify everything to where I can get back to the basics. So that's what I did. Watching and looking, reading the tape. Sunday feels great to be patient. Oh, every day feels great to be patient, right? Every day is a day to practice and be patient. And while we do that, let's get some music going, shall we? Let me get this music going, and we'll keep getting to some questions while we watch gold here. And maybe we could do some... remember, tonight, it's Sunday night. It's only an hour. We could have this. Let me make sure. Here we go. There we go. We get the Sunday music. All right. Gold on the 5-minute. Let's zoom in to see if there's any trades. Hey Dakota, how long have you been trading the markets, and what did you do before you started trading? Also, what is your main strategy for the NASDAQ? Thanks. It's crazy to think it's almost been 15 years since I've started trading. Now that's just a rough estimate. Of course, I don't know the exact day I started trading, but about 15 years now. And my strategy is just pure technicals. Pure technicals. What am I drinking? Lemonade. When should we have the trading plan form we created? What do you mean by that? That I did a strategy session a couple weeks ago. You should be able to create your own. That was the goal. The goal is to be able to view and see how I would create. It's not a trading plan, but kind of a trading template. And the goal is for everybody who tuned in and watched it and can watch it is able to create their own. Tarts, do you plan any professional fights in the future? No, nope. I'm not gonna fight professionally. I'm okay with amateur. I've heard people pronounce that. I never knew what the correct pronunciation is. Where Tiger Woods and golfers would pronounce amateur differently. But no, for me, I want to take care of my mental health first. My brain. So anytime I get into the ring, it will be with headgear and full protective gear and 16-ounce gloves, which is amateur. I plan to fight amateur. Yeah. Amateur is how many times am I going to say that word? But I have some friends that I spar with, and they fight professionally. I have one of the guys has a professional fight in about a week and a half, 2 weeks. How do you take profit? Do you use any ATR or any other indicators? I use technical analysis. My trading plan, everybody who asks me my trading plan, it boils down to technical analysis and risk management. Technical analysis and risk management. I'll look for very basic, simple support and resistance, technical patterns, pivot points, support and resistance. At Dakota, size down. Dakota, okay. I can't seem to pass the combine at all. I had 3 days of 1500 last week, then a red day Thursday, and then went on tilt. Really need help with discipline. Any tips? Sizing down. Sizing down. Yep. Mark's Trader got that spot on. You should be able to keep it active for at least a month. Sizing down. Black Swan says, am I willing to take a punch from Mike Tyson like Mr. Beast? He could be wearing an NQ costume for Halloween and knock that. No, man. No, I would not take a punch from Mike Tyson. What are your favorite plays that you would take blindly? I'm not sure what you mean by that. Surf, Sun, and Sand. Your $36,000 video, you were trading a 30-second chart. What chart time frame do you recommend? I recommend... I like this 5-minute and 100 tick chart for trading, but for slow markets, for newer traders, I always say the higher time frame, the better. Higher time frame, smaller size, wider stop loss is usually the more trader friendly formula, but to each their own, right? Are you likely to carry tilt over from your personal to your Topstep account and vice versa? Had one of the worst days of my trading life on Friday. Any advice? I don't. At least I don't think I do. I don't think I carry over tilts. I care more about what I am trading in front of you. So this XFA, I care more about my trading in front of you than I would my personal account, which is weird to think that. It's weird to think that. I think it's more of just the audience, but I don't let it get to my trading. At least I haven't noticed it in a dramatic way to say, oh, wow, I went on tilt and it affected this or it affected that. At least not to the point to where I've noticed. Going on tilt on my live account after blowing my Topstep account. Yeah, try not to do that. It's easier said than done. It's very, very much easier said than done. That's why these risk management settings in Topstep X are just so amazing and very, very, what do you call it? Undervalued. These risk settings are just great. They're awesome. How many other charts are you watching? What you see is what you get. I have 4 monitors. When I'm trading, when I'm right here, right now, I have 4 monitors. And the only monitor with anything that has to do with trading is what you're seeing. I have 2 charts. Oh, sorry. No, now this is what you're seeing. that's it. This is what you see. And you know what? I did show this, I think. I did show this. Oh, you know what? You guys are listening. You got the music going, right? Is the music too loud? Let me see if I could find this. I had a video of my setup. Where is it at? Yeah, you want to see my setup? This is it. Look, this is how I have my trading setup. And I did a little meme there. This is my setup. 1, 2, 3, 4. That's how I trade. Right? I'll have the YouTube and the YouTube chat on the top one. My trading Topstep X there. I'll have this. This is just a joke. But I'll have like a chat with moderator on there and social media. I have OBS on the top left. And then I just trade off of this one. Yeah, yeah, Keto, you got it. Not a lot of people notice that trading for dummies. That's what I teach out of. That's what I teach the class. for slow markets. I just read Trader for Dummies. We're gonna just sit here and read this book, okay, chat, and we're gonna all become better traders together. But on that note, let's do hashtag slow markets. Like I said, it's an hour class. Let's do hashtag slow markets. You know what to do. If you've been here a while, you know what to do. If you are new, shout out. Let me know if you are brand new to the stream. If you're brand new to class, I love it. There is the Twitter, the X. Just tag me in it. Tag me in a setup. Tag me in a trade. Maybe show off your computer monitors. But right there. And then, of course, I just showed you my gram, my Insta. Go ahead and yeah, that's a good example. Some of these questions I do answer, like, hey, what's your trading setup? What's your desk? Like, what does your desk look like? And then there you go. I already had it posted. So, and then when I'm not on TopstepTV, that is where I give updates. Jeffrey says, pretty new past week, and thanks for the time sharing all you know. Well, thank you. Welcome, Jeffrey. One of the biggest hurdles I face as a coach or as someone trying to help others running a class is not having winning trades, but one of the biggest hurdles I face is how would I cater to someone who's brand new, who's learning for the very first time. What is a 3-bar reversal? What is a candlestick chart? Someone new to these markets, because I want to help traders. We all started from somewhere, and then also being able to provide great education and help for traders who have been here for years, right? Where someone who's studied, they found some success, and maybe they have to go back. So being able to balance trading somebody and helping someone from day one as a learning these futures markets to maybe year number 10 to helping them get back on track. So it's a fine balance. I don't think there's a perfect solution, but being able to just sit here live, answer questions, go through, analyze these markets, because we're all looking at the same data. We're all looking at these same markets and trying to interpret them in our own way to find success. Might be a silly question, but how do you go about back testing? I really appreciate you. It's been a while since I back tested, to be honest. I like to forward test. Forward test is usually the thing I love, because the one thing that you can't test when you back test is your emotions, and I think that plays a bigger role than anything else. I would rather trade on a sim account, forward testing, meaning like trading the day to day, than back test, because you can't simulate your emotions. And here's the top of the hour. We're seeing some volatility here in gold, starting to maybe sell off a little bit. Let's watch this. How's the 80K month feeling, Keto? Just another day. Just another day. That was last month. This month I'm a lot. I did that in a day this month. Had my biggest day. Had my biggest day of the year to start this month. It was 94,000 in one day. Trading is pattern recognition and emotion recognition. Yeah, recognizing both. 94K day. As a more consistent trader, the emotional learning is where I'm getting better in forward testing. Like, yeah, forward testing. Look at this sell-off here on gold. I wouldn't say it was a surprise, because guess what? The nice thing about tuning in to slow markets is we talk about them. I was referring to maybe a sell-off down to these 50s as a possibility, right? Shouldn't be surprised by any moves in these markets. Sometimes I am, though. Okay, so let's go to 3-bar reversals with example of how to play, please. Oh, Scalp Nation. Should we go through a 3-bar reversal and examples of how to play? If there's a setup, I will. Look at that reversal. We pivoted on a dime. We turned around at these 65s. All right, look. There could be a 3-bar reversal right here. Right? We flush down to these 65s. This is now the main bar, the candlestick. And if we close here in the next 3 minutes, here's another good example of a 3-bar reversal right there. If you're able to short that. Yep, trading slowly with patience. Yeah. In this XFA. Top of the hour volatility coming 2 minutes ago. 3 minutes ago almost. Just broke the daily low. Yeah, let's see it. I'm watching this gold. Let's see how NASDAQ's playing out. NASDAQ's kind of just going sideways, so the opportunity right now is in the gold. I'm gonna jump over to micros. I'll be able to scale in with micros a little bit, and yeah. Some nasty wicks. Yeah, I like to. Sometimes it's better to just wait for things to settle down for a moment, unless you don't have a plan, right? Like, oh wow, you have a level. This is where you want to buy it. It drops off down there. That would have been a difficult one to get in. Just patience. Let's watch this, and we'll go over that. I'll go over it real time. Let's go over it real time. This is purely a technical example. And we had that breakdown. You see where we hesitated? We hesitated on the way down. We hesitated at these 68s. We broke down, went right back up, and look where we held at again. So this could be a reversal, right? We don't know 100%, but this is a signal, kind of like a breadcrumb, kind of like a hint. Like, okay, well, buyers started to step back in, right? We hesitated here, flushed, rallied all the way back up to these 71s, and now the question is, are we going to find a reversal? Is this going to hold? Now, if we do break down below this, I don't know, but if there is a reversal, I want to see these 68s hold, and then I'll look for either a break of these next pivots. So I'm reading this on the 100 tick chart just because it's slow markets and we're seeing some volatility. The same thing could be applied on a 5-minute chart or an hourly chart or a 15-minute chart. Markets are fractal, so the same technical analysis can be applied. As of right now, we did not make a higher high, and now we're starting to break down below that pivot. So it looks like there could be a decent move or continuation back down to the low side. I'll continue to watch this. We'll watch this. I'll answer questions. I'll keep going over these technical patterns as they happen. Now remember, there's nothing that's guaranteed in these markets, and that's why I'm doing a lot of what ifs, right? If this, then that. There's like, clues in these markets of what's going on. Buyers tried to hold it up. We just broke down, heading to go back and test this low. If we break this low, I'm not really seeing too much holding this market up until we can see these 62s, right? Looking at this higher time frame, we could even take a look at this hourly chart. Take a look at this hourly chart. You can see there's maybe some interest around these 62s. And then, I mean, if not, can we see a run to those 50s? These 50s is what I was referring to before we even started to see a breakdown. Gold's down 0.5%. Let's see. There's a 3-bar reversal, right? This is, I wouldn't take this one, but yeah, see, we have a nice move down. We got the 3-bar reversal, right? There's bar number 1 right there. Bar number 2 is the lowest point, and then bar number 3 would have been that one. It's a visual representation. It's not the actual, it's not one that I would take, but I'm just saying that's what one technically would look like right there. Just 1, 2, 3. And there's a lot more to it, right? There's a lot more to it. There's context. There's where it's happening at. Like, is it, if there's a 3-bar reversal that happens down here, it's going to be a lot more attractive to buy than one that's happening while we're starting to break down, right? And then time of day, and then time frame. There's a lot more context. So let's see. Let's watch this. We are holding this level. If we can hold below this, can we break through new session lows? If not, if we start to break above these 67s, then maybe we can make a run back up to 70s. How much luck percent do you think is a factor in trading? Well, any direction you could technically say is 50-50, right? Because we don't know where this market's really going. The NASDAQ, you could be a little bit, you could change it a little bit because it's equities. It's not, I'll make the argument that the NASDAQ or equities is not a true 50-50. It's slightly skewed to the long side because equities over a long period of time go up and to the right. And so equities would be slightly skewed bullish, especially the NASDAQ. And so I wouldn't say it's a true 50-50 over a longer period of time. However, since we're day traders and we're scalping, it's pretty close to 50-50. But the key is the risk management, right? Is when you win, how much do you win? When you lose, how much do you lose? And then you could use pattern recognition to change those probabilities, right? And everything's give or take, right? Risk reward versus probability. Yeah. Yep. Let's take a look. And we got some hashtag slow markets coming in. The good man caves. Seen this one before. I'll show it again because I like it. We got LeBron winning a, I think that was his MVP trophy, trading it up. Grip South Florida. Let's get some more hashtag slow markets in there. And we're just chopping around. Not finding a lot of buyers in here. Do you recommend using a MACD? Jamari, I don't recommend any indicator because that would be wrong for me to recommend a specific one. However, I would recommend for you, you could always try one out. Don't overcomplicate it. Keep it simple. And whatever you do, just be consistent with it. These 65s are holding. Kind of just consolidating here. There's no secret strategy. If somebody tells you one indicator is better than the other, I would not trust them. If someone says, hey, this is the best indicator, you should use VWAP, I would be like, go take a hike. Go take a hike. RSI in the 5-minute. Anybody who recommends and just vouches for a single indicator could just Yeah. Unless you consider technicals, but technicals is price action. Price action to me is the best one. Yeah, real-time price action, volume. Then is the VWAP, volume, weighted average price. It's a weighted average. It's, yeah. Don't trust anybody that just says you have to use this indicator, or says, oh, you need to use this indicator. It's just so hard. Everybody has their own ways. You can try different indicators out. I'm just saying the simplest. Simplicity. There's beauty in simplicity. Sean Plays made $400 on your XFA. Great work. Someone says, I like the EMA. Good. Someone says, I use the FIB. Good. Right? I've seen plenty of successful traders use different indicators, right? Someone might use this indicator, find success. Another person might use that indicator, find success. There's no real answer when it comes to these indicators. Like you go through, look at all these indicators. And you're going to tell me that every single one of these is the, yeah. You might find somebody that might use each one of these, right? You might find someone that uses this one. You might find someone that uses this one or that one or this one. Yeah. ATR and VWAP, Jose. I mean, there's some popular ones, right? You have an ATR and a VWAP that they could be very popular, very common. Volume. Yeah, buyers not stepping in. See that? You know, sometimes I have to give myself credit sometimes, and it's less of maybe about me and more about just the reality of simplicity, right? We're in a consolidating market over the past week or so here in gold, and talking about how this was resistance, and then talking about how this level's support. And now it's less about me and more about, you know, tuning in. And the reason why I love hosting slow markets is, like, we talked about this before it's happened, right? The possibility. I'm not saying, wow, come in here, everybody, gold's going to sell off down to these 50s. No, but we were talking before gold even, you know, before we even started the top of the hour volatility or the Asian session or the slow markets. We were just talking about, you know, hey, there's a decent possibility we're in the middle of this range right here. And right now we're on our way and it's bearish. You know, now gold was down 0.5%. And there's a decent probability, like I would not be surprised if we're trading back down to these 50s, right? Where when we're in a range bound market, typically the best strategy is buy low, sell high. And we're right in the middle, and it was hard to find any direction at that point. So now we're starting to find a little bit of a direction in gold. So be it, it's very early. It's very early, and this market could just bounce. But as of right now, there's a lot of selling pressure coming in. And if you were looking for longs, it might have kept you, or might have kept somebody, or understanding this concept out of a long trade, right? If this was able to help anybody out in this, you know, perspective, that's what matters. That's what matters. It's like, oh man, I would have bought this, right? Or I would have bought, you know, when we started to open because I'm bullish gold. It's like, you know, take a minute. We got to zoom out. We got to zoom out to a higher time frame and realize that, you know, buy low, sell high. We're consolidating in the higher time frame. It's very realistic that we could see a test of these 50s, or it's very realistic to see, you know, some more downward pressure. We're in the middle. Don't diddle in the middle. So that could have easily, you know, a winning trade and no trade, right? Avoiding a loss, like, oh man, not taking a bad trade is just as good as a winning trade sometimes. Not losing money, right? It's like, wow, if I didn't realize this, then I probably would have lost $300. Well, not losing $300 can be just as good as making $300, right? That's the, yeah, risk management. So that's a big part of risk management and trading is knowing when not to trade and trade location. Now, we could have easily bounced off of that, and if you bought it, like, but if that's part of your strategy and your plan, go for it, right? But just understand some of these very simple things. And this isn't some secret. I've been talking about this for years, since I started hosting and coaching here at Topstep. Simplicity. There's power in simplicity. You did not need some golden indicator. You didn't need all these indicators on your chart to tell you some very simple, basic concepts. DBA concepts. We should do that, huh? That's the trading for dummies at DBA concepts. Market going down, don't buy it. The trend is your friend. There's power in simplicity. Nick Dowie, Nick in here. I am sub to Dakota's Discord for hashtag DBA concepts. I do not have a Discord. Dobie, we have Topstep's Discord. I have a channel in it, but power of the P, simplicity. Are you a day trader or a swing? A little bit of both. Here at Topstep, we are day traders. I've been learning more and becoming a better day trader. I have a stock and options background. A lot of what comes from stocks and options, technical analysis when I do, it is the same analysis that I look at in the daily aspect or the day trading aspect. And I am becoming a better day trader. And I've learned a lot by teaching as well. You'll never hear me say I'm the best. Which has been more profitable for you, long-term, day, or swing? I think it depends. I'm a full-time trader. That's my primary source of income. Like, that's what I use to pay my bills. And it's been stocks and options. Day trading has been, I don't want to say side, but it's been a very great supplement to it. Like I said, I've made $500,000, just under $500,000 at Topstep, and then you see if you're on my socials, it's quite a bit over the past few months that I've shown. I think I just need to stop this session. Sometimes you just need to lock yourself out and wait for a different session. That's my goal for this year, Dakota. Go full time. Well, as long as you just don't quit. Okay, buyer stepped in at those 63s again. I don't know why I have that line. Let's get this off. We got 15 minutes. We got 15 minutes left, or 12 minutes. Time goes by fast. NQ buys. I almost got there. We were both correct. Greg says, you said use the will method for options. How do you spell the method you use? That is one of my favorites, Greg. Everybody knows the will method if they've traded options for a long period of time. There's a lot of content online for free. You don't pay for education when it comes to that. Same with trading. I have a hard time seeing people pay for courses or mentors or discords because so much is out there for free. It's like, man, you just paid. Yeah, I have my own gripe with that stuff. All right, buyers stepping in. You'll never quit. Good. Charting and reading, yep, all charts. Like, buyer stepping in. Raw, you'll have to just tune into my socials. When are we gonna see your ride? Once again, I showed it, chat. I showed it. I can't tell you how much. Like, when I'm not on air. Here. I'll show it. I'll show it again. While we're waiting for some hashtag slow markets. Here. That's it. Do I suggest, Greg? I do not suggest them. That's it. Oh yeah, that's right. We got to do that, right, Greg? Look, everybody, this was paid for, and yeah, I gotta. Yeah, Greg. This is not financial advice. It's not tax advice. If you want tax advice, you need to go to your local tax guy. But yeah, I really did pay for this through trading. This purely paid for from my trading profits. Yeah, it's not expensive relative to what you see on social media. You like the red breaks against the black? Yeah. Does it have an air horn? I need an air horn on it. Well, what do you do with the Honda? They totaled it. The insurance company totaled it. So the cost of the Honda that they totaled basically paid for the wrap and yeah. I'd say more than 90% of traders lose money. The majority of traders do lose money. Depending on who you ask, 90, 95%. Yeah, for no. I'm okay. Willie, I didn't get a custom plate. I could, yeah, Surf Sun Sand says, this is a fact. I'd say 100% of traders that quit never find success in trading. Yeah, that's true. You like the Honda more? I know, I'm thinking about just getting a Honda as well. Just like a used Honda Civic for just driving around for longer trips. All right, we're seeing some buyers stepping into this gold market now. Okay, a little more aggressive. We are having higher lows and we're making these higher highs now. So let's see if this holds. It's a little more aggressive than they were here. This is less aggressive than what we're seeing in this situation right now. And now we just broke through it. Now we just broke it. We'll see if it makes another one. I know, I seen that ranch. There's some Honda Civic hybrids that have amazing gas mileage. Yeah, see, we just broke that pivot right there that we tried to make, and we're breaking down. So, definitely some short opportunities in this gold. Booked $1,400. Great work, Alpha. Gold hit previous day low. Yeah, Keto, that's what I was thinking. Just going out buying a used Honda Civic that I don't have to worry that if somebody like scratches it or a little dent or driving it, like, yeah, not have to stress out about that. Then the insurance is cheap. What are the top 3 reasons people fail in trading? Well, top 3 reasons. Number 1, they give up. They quit. I'm going to answer this question. This is going to be a 6-minute answer because it's that important. The top 3 reasons why traders, in my opinion, fail. And like I said, this is based off my experience, what I've went through, and my opinion. And I'll take the last 5 minutes to answer it. But yeah. So here's the reason, in my opinion, like I said, is they give up. They quit. You see people that go and they get their master's degree or bachelor's degree in college, and they spend 2, 4, 6 years getting education, or longer, right? 2, 4, 6, or even longer to get a college degree. And they don't give up, right? They realize what it takes to get that college degree, because it's understood. Wow, if you want your bachelor's, it's going to be, say, 4 years, depending on what it is, where you go, and how many classes you're taking, right? And if that's understood, you're like, wow, okay, I'm going to sacrifice 4 years or 6 years of my life knowing that I'm not going to be able to get the job I want until after I get my degree, and maybe not even have a job for that period of time. And they don't quit and they don't give up, because that's a very realistic understanding from their experience. In trading, that's not what traders think. They don't think, hey, I'm going to get into trading and I'm going to look at, 4 years until I could start finding success. They give up so fast, right? They see social media, they see all the flashy people making thousands and thousands of dollars and fancy cars. It's like, I made all this money so fast, and they can't duplicate that in the first 3 months, and they realize how difficult it really is, and not just trading, but emotionally as well when it comes to the trading aspect. And then they just give up. They don't take that 4-year commitment to realize, hey, I'm going to be dedicated to this in 4 years no matter what. I might find success faster than that. I might find success a little bit later than that, but I'm at least going to be dedicating this in this amount of time, right? So they have too high of expectations with too small of a time frame. I think that's number one in my book. Number two is they never get over the emotional hurdles, right? The psychological aspect, psychological aspect of dealing with what we do with as traders, right? As we continue to find buyers stepping in this gold. Nice buying opportunity right there, to be honest. I missed it. That's okay. So psychological. Traders don't realize how much the psychological side comes into trading. I would say it's the majority of trading. I would say it's a big majority of trading. Depending on who you talk to, they'll have a different percentage of how much it affects their trading. I would say it's well over 80% of trading is controlling your emotions and the psychological aspect. And people underestimate that. People don't realize that. A lot of people have too big of egos, too much ego, and too afraid of getting to tame their own emotions, right? And then lastly, number 3 is just switching strategies. Traders overcomplicate things. Traders use too many indicators. They switch too fast without enough data. For example, I would not switch a strategy or the way I trade unless I have a solid 6 months of trading that I'm struggling with. And even then, I wouldn't make a dramatic change. It would be very subtle. For example, if I struggle for 5 months, or this past year, I struggled in my day trading for 4 or 5 months. And I didn't change anything dramatically. I didn't add indicators. I didn't do this. I didn't change anything up. I just, very subtle adjustments. I stopped looking at the Nikkei. I stopped overcomplicating. I went back to the very basics. Keep it super simple. And traders struggle to do that. They use like a moving average, and they blow an account in like 2 weeks, and they're like, that strategy doesn't work. I'm going to switch to another one. And the next thing you know, they switch moving averages, or then they added another moving average, or they added a different indicator, and they ended up blowing that one in like 3 weeks. And then they switch again, and they switch again. And they go through this vicious cycle of changing strategies, when reality, you don't know if a strategy and the way you're trading it's going to be successful unless you have like a minimum like 3 months worth of data to be like, okay, you can find some success here. Break even is a success in trading at some point, right? Just being able to understand success. Those are the top 3 things that I believe traders, and why most of traders fail. Number 4, this is honorable mention because this is up there too. It's unrealistic expectations. That goes hand to hand with that time, right? Like the college expectation and how long it's going to take. Unrealistic expectations. Social media feeds into that, and it pisses me off because that's why I get so pissed off at this. I quote this of, wow, I used to call simfluencers. Lots of drama online, and I don't mind that I started some of this, is simfluencers. And those are influencers that have a big following in this industry who just cycle through simulated accounts without showing that and giving that realistic expectations, right? Like, oh my God, look at this. I made $30,000 on 50 accounts. And you don't realize how many resets they've went through, or they don't share the full transparency. And that's such an unrealistic expectation when you try and duplicate that in real life, right? You can't duplicate that in real life in a personal brokerage account where you're going to try and do that yourself. It's almost, it's just insane to me. I've always thought it was insane. I've started to be a little less, I guess, a little less, I don't know. I don't know how to say it. I've been a little more flexible when understanding the prop firm world. Yeah, a little less. I've been more tolerant, I guess, because you want to lead. Eventually, we want to be successful traders, right? We want to show consistency, and ultimately, I want to be able to trade. And here's an example. I want to be a trader by myself. I don't want to depend on a prop firm for my success. I don't want to have to deal with a firm changing rules or doing this, or wake up in the morning and something happens. I want to be able to have a brokerage account and trade it from anywhere around the world, right? Not depending, being your own business in a way, I guess, if that makes sense. So you don't want to depend on anybody. You want to find that consistency outside of a prop firm, because prop firms, in my opinion, is a great stepping stone for traders who want to learn how to trade, find that consistency, and eventually make it to a live environment. Like, that's what we want to do. We want to make it to a live environment and be able to trade real money in a live account. And when you're in a live account, there's no such thing as unlimited resets. and it's just, you can tell I'm passionate, and it just really gets me. It gets to me so bad when I see stuff like that, because it's so unrealistic, and I see traders go on tilt and blow accounts, and they have a bad experience in this futures trading world, and they leave it and they never come back. And that's not what we want, right? That's not what I want. I want to be able to grow this community. I want to be able to grow these futures traders, new traders coming in. Every year there's a new set of 18-year-old, 19-year-olds, younger traders learning how to trade futures, and make sure that they are able to have realistic expectations and a good understanding to what it takes to be able to continue to grow, not a very bad experience where they leave and they don't come back, right? So that's what I'm trying to do here, and that's why I get so passionate about it. But those are the top 4. 1, 2, 3, and then 4 is the one that I am passionate about the most. And why I am so avid on the social media. So excited. New week, FOMC on Wednesday. I'm excited for it. I will be on tomorrow morning. It's going to be Monday the 15th. I'll be on tomorrow morning with Braden. Excited to be on that one. And then, like I said, just beware. Wednesday is FOMC. Tomorrow and the next day seems a little bit light on the news. news side of things, but anything can happen. We know how headlines and tweets can start to move these markets anymore. So until then, I will see you bright and early tomorrow morning for fast markets. If not, tomorrow night for slow markets, where I'm on right here every night, Sunday night through Thursday night, answering these questions, enjoying this. And if I do see trades in this market, I take them. But there's our risk disclosure. Take care, everybody.